What's up guys? Today we will be trading with momentum. Price moves rapidly in the market and the trader is looking to make a decision. These are three key ways the momentum indicator is applied to technical analysis. Number 1. Divergences. Divergences are powerful signals. Where the momentum is making higher lows while price action is making lower lows, it is a sign of positive divergence. This is not a certainty that the trend is about to reverse, but it hints at a strong probability that the market is going to rebound in the near future as price is descending at a decelerating rate. For negative divergence, the market is making higher highs while the momentum indicator is making lower highs. Although not a certainty, this points to a strong probability that the market is running out of steam and might be due for a retracement in the near future as price is ascending at a descending rate. There are exceptions where the market ignores the momentum indicator and its divergences. This will be explained in another video, so stay tuned. Number 2. Zero crossover. The market is considered to be accelerating when the price rises with a rising momentum line above zero. Therefore, a cross-up can be a factor to consider for an entry decision. On the flip side, a cross-down is a bearish signal. Overall, it is important to remember that it is not wise to use the momentum indicator to trade against the trend. Number 3. Momentum extremes. Now this is an arbitrary and subjective use of the momentum indicator. Because the momentum indicator does not have a predetermined upper and lower boundary, a trader can draw two lines to establish oversold and overbought levels. Once these levels are determined, they can be used as a gauge for when the market has reached extreme levels and might be due for a correction. Again, this is highly subjective and should not be the sole factor for decision making. Now for the other takeaways. The momentum indicator measures the velocity of price change and therefore is used as a proxy for inferring the strength of the current trend. Technical indicators such as the momentum can never predict the future. They only convey information and provide insights pertaining to probability. This video provides a summary of what the momentum indicator can do. For a more in-depth comprehensive rundown on the application of momentum, please check out the other videos in this channel. It delves deeper into how the momentum indicator can be used in conjunction with other charting tools such as candlesticks for a more potent trading signal. Thank you guys for staying till the end. Subscribe to this channel if you like trading. And of course, hit the like button if you found this video useful. For more trading knowledge, tips and strategies, make sure to check out our playlist. I'll see you guys in the next session. Take care.